Hello, my name is Mark Morton. I work for Mercia Group and I'm here to do a short presentation on behalf of Croner Taxwise. Today, this little session is on changes to entrepreneurs relief over recent months. And some of you may be having a little bit of deja vu about these changes, might think I've heard about them before. You would be perfectly right. In essence, what's happening is the government, at the end of 2014 and into last year, they made a number of changes to entrepreneurs relief. HMRC have realised that they made a complete mess of them and so are having another go, which doesn't fill you with tremendous confidence, it has to be said. So 3 specific changes I was just going to kind of quickly run through, show you what the slight differences are. The first one relates to effectively incorporations and the selling of goodwill from sole trades partnerships into limited companies, something which has become very common over the last 10 or 15 years. Problems from the revenues perspective is what is the value of goodwill? It's a bit of non-quantifiable, but secondly, the fact that after tape relief stroke entrepreneurs relief, you've got a very generous effect on capital gains. And so what the revenue did at the end of 2014 was to say, actually, if you transfer as part of effectively a qualifying entrepreneurs relief disposal, but primarily to do with incorporations, if you transfer goodwill to a close company with which you're related, and as you might imagine, related was pretty broad. So if it was my self-employment and my company, we were related, me and my wife's company, my brothers, my sisters, family tree up, down and across, partners in a partnership, so a pretty broad concept generally. If I transferred as part of an ER disposal my goodwill to a company like that, then effectively my goodwill did not qualify for entrepreneurs relief. Now, there were various tweaks to try and take account of partners who truly retired at the point of incorporation, but the fundamental point, if you look back at family businesses and incorporations over the last 10 or 15 years, the vast majority would have been caught out by that rule. It was very broad, and it was effectively saying, actually, your capital gains rate is 18 or 28% accordingly, not 10% on that goodwill. So pretty broad set of rules with a kind of slight exemption for retiring partners. Now, quite interestingly, what HMR seemed to acknowledge is the idea of who is related to the new company was too broad. The idea it was you, your spouse, your blood relatives up, down and across partnership, it was all too broad. And therefore they've taken quite a big step backwards. So going forward, what the new rules are saying, again, similar point, if as part of an entrepreneurs relief disposal, I am transferring goodwill to a company, then these rules which prohibit ER on the goodwill will only apply going forward if I and either companies which I control or trust in certain circumstances, but fundamentally I have a 5% stake in that company. Not spouses, not brothers, not sisters, not blood relatives, not anyone else. So they've gone from a very broad set of rules for family businesses to something which is a lot narrower. And it does beg the question, if I'm going to sell my business to a company run by my wife, I would have been prohibited from having ER on the goodwill value. Now I don't appear to be. There is a big unless to that though. There is a big caveat to this. There is a big catch-all within the legislation in terms of tax-motivated transactions again, but I'm sure there must be a commercial reason why it's my wife's business and not mine anymore, and therefore I can have entrepreneurs relief on that £1 million worth of goodwill. So just trying to illustrate, it's very, very much looser set of rules in many respects. And the interesting thing again with this, backdated to the original point of change, so it's as if the first change never happened and that for all disposals from December 14 onwards, this new variant was always in play. So whether that gives you any kind of retrospective consequence for any clients is maybe worth considering. So that was the first change. The second change, to do with entrepreneurs relief and joint ventures. If I give you a simple example, if I have a company, if I own a company which invests in another company, and that's all it does, then my company cannot be a trading company. Just doesn't trade, doesn't do anything like trading, and that's the end of it. However, for a good 15 years, there has been a set of rules which said if the company invested in was what was called a qualifying joint venture company, so it was set up in the right way and did certain things, then any trading it did could be deemed to be done by my company. I.e. my company, although an investment company, was deemed to be trading, and suddenly I picked up ER, subject to other normal rules, on the value of what it was effectively an investment company. Now, the government in 2015 felt those rules were being abused and therefore merely said, actually, we're going to take away that look-through. My company cannot look at what the company invested in does anymore, so there's no deeming rule. Therefore, my company is an investment company and suddenly doesn't qualify overnight. And I came across a couple of businesses early in the year who proper joint venture arrangements, completely stuffed by that rule, had to spend significant time and cost restructuring their businesses to take account of that change in law. Unfortunately for them, they may wish they'd kind of sat tight and waited, because the revenue now seem to acknowledge that what they did was too wide again, and therefore have gone back to a stage which says, if I, as the shareholder of company one, have an effective 5% stake in the second company, so a percentage of a percentage holding, but if my company has a 50% stake in the second company, let's say, as long as my effective stake is 5%, which it would be, then that look-through still remains. And in fact, again, is backdated to pretend that the first change that the revenue got wrong never happened again. Good as far as it goes, very upsetting for those businesses who've restructured and so on to find that actually possibly they needn't have bothered. I suppose a final point on this to be aware, similar but not the same rules for corporate members of partnerships. So little tweaks again if you've got any of those as clients. Third change in this series was associated disposals. Again, to do with partnerships and limited companies where I am a shareholder or a partner, but then hold primarily, doesn't have to be, but the building from which the partnership or the company trades, and I own that personally. And for many years, a set of rules which said in certain circumstances, if I have a material disposal, let's say of corporate shares, and then sell the building, I can have ER on the building under certain conditions. The rules never defined what a material disposal was, didn't define a percentage. So theoretically, if I had 100 shares, if I could engineer a transaction on one share, I could then have sold the building and picked up £10 million worth of entrepreneurs relief, or entrepreneurs relief on £10 million. It was never entirely clear what material disposal meant. So what happened last year was HMRC brought in a 5% test, which effectively said, if I offload 5% of my shares now, that will have to be. 4.9 isn't good enough, 5% is. So I quite like that, it's much more definitive now. But if I offload 5% of my shares, I can then sell the building and get ER, all other things being equal. The slight problem with the initial rules was that if that 5% transaction was what was defined as a share purchase arrangement with a connected party, it didn't count, i.e. I didn't meet the 5% test, even though I had engineered a 5% transaction with, let's say, my son or something like that, and therefore suddenly transactions with connected parties were deemed to cause you a problem and not give you that flexibility. And again, what the revenue have effectively done is look back and say, actually, that's too broad. So they're taking a step back and saying, actually, initially, we don't care who that original transaction is with. If there are then side arrangements for me to offload 5% and then get them back in the future, that's a different matter. But a straight 5% transaction is effectively going to be ignored whoever it's with now. So I'm now, if I am a shareholder with a property outside and I get an offer for the property, not the company, I'm now in a position where I can transfer 5% of those shares to my wife. That would trigger the 5%. It wouldn't matter that that's with a connected party, and then I can sell the building and potentially pick up entrepreneurs relief on 10 million of value. So again, all three sets of rules, very restrictive in the first place, and they've been loosened off quite a lot. The second thing with associated disposal, I think, which is worth bearing in mind, the rules never said how long I need to have owned the asset, the building for. What the government have brought in now is a 3-year ownership test. So what we are saying going forward is for acquisitions of properties from June of this year onwards, June 16, I will have to own the building for 3 years before I can ever accumulate entrepreneurs relief on that asset. For buildings held before that, there is no period of time over which that asset needs to have been owned. From acquisitions effectively from June onwards, there is a 3-year test. And it has to be said, looking at these rules, none of them are straightforward. They are certainly a bit more flexible than they were this time last year, but again, a note of caution, they do need to, they do need a bit of reading and a bit of thinking about to ensure that your clients are definitively qualifying for their entrepreneurs relief at 10%. So please bear that in mind. Take a good look at your clients' affairs before they get to this point, and just make sure that 10 million in entrepreneurs relief they're on is in the bank. Thanks very much, and I hope that's made you up to speed with the current entrepreneurs relief position. Thank you.